bite. I know I'm a grifter strong man. You could lick your hand and smack me in the nutsack. Thank God for Tesla my Esla and you strong man.
Well, good afternoon, almost evening, everybody, and welcome back to Long Dong Personal Truck Stop. We're doing yet another grifting stream where you either super chat me $10 or Venmo me $9, and I'll cover whatever topic you want me to talk about. You could ask me about life advice. You could ask me to look at one of your clownish stunts. You could ask me about a cryptocurrency. You could ask me about anything as long as it's within reason, okay? There's some very spicy, controversial things that I cannot talk about on YouTube because YouTube's very censored and we have to be politically correct at all times. But either you super chat me $10 or you Venmo me $9 and I'll answer whatever question you want within reason, okay? And if I can't answer the question, find another freaking topic. All right. The Venmo link is in the pinned comment. I highly recommend you use Venmo. It's way cheaper. So I make more money and you save money using Venmo. So I highly recommend you use Venmo. But if you insist on super chatting, that's your choice. What's your opinion on Meta? I don't know. What's your opinion on sending me $10? Come on, GG Forever. You know he won't tell you without paying him money. That's right, boy. Daddy's here to make money. We got Alan Carlson, the world's biggest whiner. The biggest whiner in the world. Okay? It's just like, it's incredible how much you whine, dude. You're just like you're a saboteur. You're a saboteur. Don't do it. No, he doesn't. He's just, look, guys, I'm desperate. I'm in desperate need of money. Okay. I'm getting warmed up for self-employment next year. Okay. Like, yeah, I've got a full-time job. Daddy's cooking. I don't worry about my income. Any bill that comes up, I just pay the freaking bill. Doesn't bother me whatsoever. But next year, we got to double down. Okay. We got to do way more live streams. We got to grow the channel. I need to shill my tax preparation harder and harder every single day. Next year is going to be crazy for live streams. Now, I got to figure out how to balance it out with tax season and YouTube, because obviously I'm going to be doing consultations with clients. I'm going to be preparing people's taxes. So I can't just sit on YouTube all day and just do like infinite freaking live streams. I can't do that. I'm going to actually have time to do people's taxes. So I'm going to have some kind of schedule I set up. I think at minimum, I can do market open and a market close every day during tax season. And then once tax season is over, then I can really hit YouTube hard. I mean, market open, daily clown report, market close, random videos on random hot news topics, whatever I got to do. Okay. But you're going to be tired of listening to my voice. I'm going to be glued to this seat. You know, obviously I'll work out and stuff. You know, I like to work out. It's good for you. And you got to avoid cabin fever. You know, you can't just stay in the freaking house all the time. So I'll be doing other things, obviously, but you will see me live stream a lot more than you're used to. Okay. Right now I have a job. I have kids. I work out. I don't have that much time to live stream. The only reason I can even do this today is I don't have my kids this weekend. But guess what? If I did, I'm hanging out with them. Okay. Just how it's going to go. Is this live even going to happen? Oh, yes, it did. Uh-oh. We got our first super chat. JS31-J2C. Thank you, good sir. Thank you, good sir. STR. Isn't that the MicroStrategy preferred? Let me look that up. Hold on a minute. Okay.
Okay. Let's go look up STRC.
Pretty sure it's the MicroStrategy thing. STRC stock. Strategy variable rate perpetual stretch preferred share series A. Can we get any more clownish than that? All right, let me go ahead and share my screen here. All right. So Number one, this is a security issued by an evil company, a company that is pure evil. MicroStrategy exists to enrich Michael Saylor and select insiders at your expense. He's a con man. He's a fraud. He's a liar. How Bitcoin works is people buy Bitcoin and then they proselytize the religion of Bitcoin to other people to stimulate demand. That pushes up the price of Bitcoin. As the price goes up, more people notice and they get sucked into the Bitcoin cult too. And it goes up and up and up and up. And the whole time, the cult continues to remind you, keep buying and never sell. And then when things get real, when things get serious, the original investors like Michael Saylor will sell. Michael Saylor will sell Bitcoin. He'll make up some stupid narrative about why he had to do it. He's going to do it. And he's going to be extremely rich. And then the price of Bitcoin is going to collapse. And the price of MicroStrategy is going to collapse. But he's going to be a multi-billionaire. And you're going to be left holding the bags. And you're probably not going to blame him because that's how stupid most of you are. All right. So I want to look at let's go look at MicroStrategy stock analysis. And I want to explain something to you. Okay, this is my suspicion. We'll look at STRC, obviously, but okay, so MicroStrategy has done extremely well since the beginning of basically the pandemic. Okay, the stock is up massively starting in 2024, and it got to a high of It got to a high of what, 434, and then it's sold off pretty significantly recently, but that's okay. There's going to be another pump, I'm sure. PE ratio, completely ignore it. Doesn't matter. This is a leveraged Bitcoin holding. That's all this is. Do not even look at earnings. It doesn't matter. What does matter for STRC, however, is cash flow. Why do I say that? Well, preferred stock comes with a dividend, right? You buy preferred stock and you get priority of dividends over common shareholders. So preferred stock is like this weird combination of bond and stock, basically. And, common stock is generally going to rip, right? It's going to go to the moon. That's what common stock does. If the company massively grows earnings, the common stock is going to go to the moon. The downside of common stock is you get paid last. The bondholders get paid first. Then the preferred shareholders get paid first. Then whatever profits or cash is left over goes to the common shareholders. That's how it works, okay? MicroStrategy has profits on the income statement because of Bitcoin price fluctuations, but it is a cash flow negative business. It doesn't generate positive operating cash flow. Look at the last 6 quarters. Negative operating cash flow and negative capital expenditures. So what does this tell you? Where is the dividend coming from? Well, I think I know where the dividend is coming from. The dividend, if it's negative operating cash flow, the dividend that you're going to get on STRC is going to have to come from common share issuance. Okay, so new people are paying in, and that capital is used partially to buy Bitcoin and then partially to distribute cash to the shareholders. What does that sound like to you? Now, if the core business was making positive operating cash flow, that's a different story. It's not. That's why you have these huge profits, but negative cash flows, because all the profits are just Bitcoin going up. That's it. That's why it's profitable, bro. Okay? So the cash that's going to be used to pay your preferred dividends, that has to come. It's not going to come from the business itself, because there actually is a business underlying this. It's going to have to come from new capital injections. So let's go look at the balance sheet. So they have 54 million of cash and 118 million of receivables. Okay. So there's still a core business going on here. But if let's say they didn't issue stock and they were just relying on the capital on their balance sheet and profits from the business or cash flows from the business to pay the preferred dividends, guess what? they would eventually run out of money because they don't have positive operating cash flow. So the only way they can continue to pay your dividends is, unless they change the operating cash flow, the only way they can pay the dividends is by issuing additional shares, capital. That sounds like a Ponzi scheme to me. It is unsustainable to pay freaking dividends from issuing shares. Not good. So you look at STRC, right? 10.5% yield. What are people going to do? Wow, that's a good yield, bro. Where's the yield coming from? Is it coming from the business's core operations? No, it's not. It's basically a Ponzi scheme. Oh, but there's another way he could actually get cash to pay the dividend. He could sell Bitcoin. If it gets serious, he's going to sell. So yes, if you buy this, sure, he'll probably pay your dividends for a while. But at some point, it's going to collapse. And if you got, a couple quarters or years of dividends, or however much, how much is it? Is it monthly? Yeah, of course it's freaking monthly. You're going to get your monthly check until you're not. And then you're going to be very upset because you're going to lose all your capital. I'd rather maintain my capital, and I'd rather get paid dividends, if I want them at all, from a business's core profits, not from them issuing shares to new investors. Okay, do you see the problem here? Look at this. Frustrated by low yields? Stretch your income, bro. Yeah, is the income sustainable? That's the question you got to ask. The only way that it's going to be sustainable is more share issuance, or he's going to have to sell Bitcoin. That's the only way. I don't like that. Okay? No, I would not recommend you buy this. You do not trust Michael Saylor. He is a con man. He already got in trouble for freaking fraud before. They were overstating revenues, I believe, back in the dot-com bubble. And you trust him now? Why? Because he talks good. He sounds really smart on his conference calls. No, high yield credit. That's a pretty high freaking yield. Okay. And it's not coming from cash flow. No. But you do whatever you freaking want. So no, garbage. You'll thank me later. Okay. All right. Oh, we got two more. Daddy's printing today. Look at this. Please analyze GAMB. What in oblivion is GAMB? Oh, and we got another Venmo. Whoa, Daddy's printing. See, all you haters are so jealous, okay? At least I'm an honest grifter. You know what? I don't say, give me money, you can beat the market. Woo! I don't think you can beat the market over the long run. And if you do, you're one of a very select minority of people that will, okay? That's my honest opinion. If you don't like that, go subscribe to Meet Kevin. Wow. All right, GAMB. What is it, Gambino? The Gambino family? Never heard of GAMB in my life. Oh, I got a Hinge notification, too. It was probably a very obese woman. GAMB stock. Gambling.com. Oh, my favorite type. Are we sharing? Okay, we're sharing. Gambling.com. Man, I'm sold. This stock stock might actually do good. Everybody freaking gambles now. It's like Robinhood. Okay, yeah, let's go to stock analysis. GAMB. Gambling.com. What does this wonderful business do? I wonder. Excuse me. Gambling.com Group Limited operates as a performance marketing company. Performance marketing company. What is that? For the online gambling industry in America, the UK, Ireland, the rest of Europa, and internationally. Oh, Europe is not international. The company offers digital marketing and consumer and enterprise data subscription services for iGaming and social casino products. It operates various branded websites, including gambling.com, bookies.com, casinos, and freebets.com. Let's go look at gambling.com. Maybe buy VT. What is this? Okay. What is this? Find online casinos. I'm going to get a freaking virus. Look at this. Okay, you know what? You know what's happening here? These companies pay gambling.com to promote this freaking filth. And then you moron, oh, I'm gonna gamble and I'm gonna beat it, bro. All right, so okay, so they're shilling other gambling websites. They're totally getting paid to do it. Free casino games. It's free, bro. Yeah, it's free to get you freaking hooked, and then you start gambling money. Krabby's Gold. We'll be talking about Pokemon here. All right, so that's gambling.com. Wow, this looks very trustworthy and reputable. Let's go to freebets.com. If I get a virus, I am suing you for everything. You will be bankrupt. What is this? Okay, so it's just a funnel for other gambling websites. Do you trust these? Betfred, Tote, Boyle Sports. I got a boil on my butt. High bet, bet 442. You trust this? You think I want to click this? Okay, yeah, it's just a funnel for other gambling websites. But you get free money, bro. All right. So let's see. Market cap of 230. What's the currency? Oh, okay, it's in USD. Market cap of 237, revenue of 147, net income of 14 million, PE ratio of 16, and a forward PE of 7. That's extremely low. Okay. I'm curious why. I mean, usually when you have a low forward PE, there's not a lot of growth priced in. All right. So in the year, the stock's down 33%. It's basically trade. Oh, you know what? I know why you like this stock. Okay. So if you're a genius chart reader, basically you see, oh, well, it shoots up and then it dips and then it shoots up and then it dips and then it shoots up. So now it's dipped massively. It's like as low as it's ever been in the last 5 years. So you're like, oh, it's going to shoot up. Maybe you're right. Maybe you're right. You could gamble. That's all this is. You're gambling on a gambling stock. But this chart tells you something, okay? Let's look at the financials. All right, so revenue's growing pretty significantly, okay, because everybody's a degenerate gambler until the economy collapses. Please bring the collapse. So very solid revenue growth. Gross margin high, operating margin high, profit margin, they just booked a massive loss in the most recent quarter. I wonder why. Let's go look at the cash flow statement. Other operating activities. It doesn't even freaking say what it is. Let's go back. What changed? Trying to find what caused this. Other unusual items. You know, we got to freaking ask. Why did gambling.com have a large loss on its last financial report? Let's see how good Google AI my hot guy is. Related to the fair value movement in contingent consideration and other unusual items. It was weakened by unusual items related to the fair value movement in contingent consideration payments owed to last acquisitions. Okay, so the accounting for acquisitions, like deals with Odds Jam and Spotlight, involves complex financial reporting, including potential adjustments to the value of future performance-based payouts, which can appear as a law. Okay, especially they have to pay out more freaking money because of agreements they had with prior acquisitions. Let's go look at the cash flow. Okay, so I mean, like, it's a gamble. Okay. I mean, obviously I see the chart. I get it. Okay. If you want to speculate on this, go right ahead. Go right a freaking head. But I would not put significant money. If I was to gamble on this, I'd put like a couple $100. That's it. This is not something you put your entire freaking portfolio in. The chart's telling you something. If they book that huge loss, that means they're going to have massive payouts they're going to have to make in the future. And the market's pricing that in. That's why it freaking sold off. Okay? This is degeneracy. But I can see you're like, oh, well, yeah, look at the chart. It goes up and it down, and it's usually profitable. You go right ahead. I mean, some of the metrics look good. Revenue's growing pretty significantly. Margins pretty strong. I mean, they're contracting a little bit, especially compared to 5 years ago, but still pretty strong margins overall. So some of the basics look good, but this huge write-off that they had, that's a sign of potentially a lot of capital going out of the business, not into your pocket as a shareholder. Let's look at the balance sheet. Okay, they got 19 million in cash, 17 million of receivables. Other receivables here. They got 41 million of current assets, 70 million of current liabilities. Yep, this is the payout right here. So they debited the expense and they credited the payout. So this contingent consideration means they need to pay out a bunch of money. And they actually now have more debt or short-term debt than assets. So they're going to have to raise capital. I don't know how they're going to pay this. If they have 70 million of current liabilities and 41 million of current assets, they're going to have to raise capital, I would imagine. I don't know how their business operations could cover it. So I can see why it sold off. Now, they got some serious long-term debt, too. Look, they have 75 million of long-term debt, and it was mostly related to acquisitions and intangible assets. So, yeah. Okay, the stock's selling off for a good reason, in my humble opinion. But hey, if you want to gamble, it goes up, it goes down, it goes up, it goes down. You be my freaking guest. But you also have to wonder, okay, what if this happens again? Or if they have to record another loss because they have to pay out more contingent consideration. When does it end? I don't know. Okay, so that's very concerning. I can see why that's happening. Let's see. Oh, my parents are calling me. Mommy, I'm busy. I'm sorry. Okay. Gobble up share. Yeah, gobble them up, baby. Gambling.com has a dilution problem, but may still be a contrarian bargain. Yeah. Good luck. I mean, I could see why you'd want to gamble on it, but I'm not freaking doing it. I can tell you that. Okay. So that's Gamb. Next, we have Tuya. We have a shark giving me a company that is almost like tuna, but it's Tuya. All right, let's see what Tuya is.
Tuya.
Tuya, Mayuya. Oh, we got a penny stock. Wonderful. My favorite type. Let me throw in some wonderful, delicious nicotine substitute products. All right, so what does Tuya do? Let's look at the chart first. Are we doing a Carvana play here? What is this? Provides AI cloud platform services in the People's Republic of China. The company, through its Tuya open source development framework and universal AI agentic engines, including the AI development platform, integrates AI capabilities to lower barriers for AI development. It offers physical AI solutions for smart devices, commercial applications, and industry developers through its cloud computing and spatial intelligence capabilities. Let's go to the website. A Chinese penny stock. Create AI-driven smart products your way. Leverage cutting-edge AI and a decade of Tuya's expertise to build smarter AI-driven products on our platform. Oh, you know what this reminds me of? What is that company? Figma? Is it Figma? It sounds a little bit like Figma. All right, so what can I do here? Smart residential, smart housing, real estate, developers. Okay, so it looks like you can use this to make apps. Yeah. Let me read a little bit more about this. It's a leading global AI. Oh, yeah, it's a leading global AI cloud platform. Through its 2-year open source development framework, they integrate multimodal AI capabilities to lower barriers for AI development, efficiently advancing the realization of AI-driven lifestyles and accelerating AI integration with the physical world. They offer innovative physical AI solutions for smart devices, commercial applications, and industry developers. So it's cloud computing and spatial intelligence. It also provides a complete, open, and neutral global AI OT ecosystem. Wow. They've got 200 plus regional distribution of developers, 1 minute develop a smart app interface, and 15 days to achieve mass production of smart devices. Okay, so it's kind of like an intermediary if you need something developed. Interesting. Okay. Oh, is this my developer right here? I'm sure this is what the average 2-year developer looks like. This weird European looking man. All right. Well, I guess let's go look at. So number one, red flags. It's a penny stock. Number one. Number two, it's a Chinese penny stock. Okay. If you want to invest in China, my humble opinion is, this is just my opinion, not financial advice, consider investing in a broad market ETF in China. That is my recommendation. This is a penny stock. Look at the sell-off. What is this telling you, people? This is probably a clown stock. Now, of course, it could go to the moon. You know, of course, there could be some kind of weird manipulations going on. Maybe you're just doing this as like a quick play, hoping it pumps for a couple days so you can sell it like it did back in the beginning of 2025. Chinese penny stock? I don't know about that, guys. All right, let's look at revenue. So they had some revenue decline back at the end of the clown market, and now it's coming back. They're posting decent growth, but it's definitely decelerated. They were doing 21%, 27%, 33%, and then it fell pretty significantly to 9.35%. Let's look at profits. See if there's margin erosion. So they've actually been able to increase gross margin. Operating margin, they've been basically massively unprofitable until recently. Okay. And I wonder if that was an accounting one-off adjustment. Trying to see if there's any weird items on here. No, I guess they've just been able to control costs a little bit better. Yeah. Yep, they basically just grew revenue and controlled costs, and that's how they were able to turn a profit, basically. So operating margin is pretty crappy. Profit margin, however, is pretty good. And the reason that is because of, let's see, interest in investment income. Okay, so this is kind of like Palantir back in the day when basically all of their bottom line profit came from interest and investment income. From their core operations, they're not making a lot of money. Let's look at their balance sheets. This is in USD. They have $834 million of cash and short-term investments, and they have current liabilities of $91 million. So they have a very, very, very strong balance sheet from a liquidity standpoint. Property, plant, and equipment. They've piled a lot of money into long-term investments. I'm not sure if this is like partial investments in other companies or what. I do see a decrease here. I wonder if they had a write-off in Q4 of 2024 for one of their subsidiaries or businesses that they invested in. Yeah, you see a big spike in operating expense. Yeah, they probably had some kind of write-down in their investments. They probably made a crappy investment. If you don't own more than 50% of a company, if you own between basically 20 to 50% of a company, you have to record that as an investment on your balance sheet. You don't consolidate it in the business. Now, if you control the company, then you consolidate it into your financials. But if you only control 25% of the company, you record the investment as a debit asset on your balance sheet, and you adjust the asset account based on profit and loss of the underlying investment. So something happened. One of their investments went to the poopers, it looks like, back in Q4 of 2024. All right, but I mean, overall, you know, if you can trust the numbers, the balance sheet's very solid. I mean, $834 million of cash. $91 million of current liabilities. Any long-term debt? Really no long-term debt. So balance sheet, if you can trust the numbers, very solid balance sheet. They're going to be fine for a long time. Unless the numbers are fake. You never know. Operating cash flow is positive. Okay. I wonder if maybe it's stock-based. There's some kind of non-cash expense that's making them barely profitable. But operating cash flow, they've been consistently positive operating cash flow. Let's see. Oh, they paid a dividend. Wow. So income statement, barely profitable. Most of the profits come from investment income. Revenue growth is decent, but it's massively decelerated. Balance sheet, very solid. Cash flow, they have positive operating cash flow. So there's some positive things going on here. But it's a Chinese penny stock, and the market is definitely telling you something. Maybe it just got too big for its britches back in 2021, but that's a little concerning. You can see the forward PE is 17. I wonder if they have a massive deceleration in the revenue that the market's pricing in for the future. There's a car outside. I'm sorry. It's freaking loud. So I would not touch this with a 10-foot pole, but hey, this is like gambling, a speculation stock. This is not, oh, this is the core of my portfolio. If you're all in this, you're a moron. All right, so that's to ya. Fabio likes sipping green vomit through straws. Okay. And we got a new member, Greystone89. Welcome, good sir. All right, we got a Venmo. I don't want to forget about my Venmo king. Oh, hold on, I got to check Hinge first. Somebody matched with me. See if she's attractive. Oh, she's got a little bunny outfit. Oh, no, she has her snap in her profile. It's a fake profile. Of course. Of course. All right, so let's check out the Venmo. We got a man whose name begins with S, so I doxed him. Snow. He wants me to analyze Snow. Snow my blow. Snow my blow. Oh, Snow. I've heard of Snow before. Isn't this like the bitter enemy of Palantir? Oh my God, look at that. Market cap of 89 billion on trailing revenue of 4 billion. Oh, that's a little scary. A price to sales of 21. Now, keep in mind, Palantir has a price to sales of like 100 billion. You're paying $21 for $1 of trailing revenue. So this is very richly valued. Snow my blow. What happened to this stock? All right, so got its cheeks clapped during the pandemic, and ever since late 2024, like every other freaking stock, it's been rallying hardcore. I can tell you right off the bat, this thing is very richly valued. If we have some kind of market, even like a bear market, this thing's probably going to get clapped. Okay, that would be my suspicion. All right, Snow provides cloud-based data platform for various organizations in the U.S. The company includes AI Data Cloud, which enables customers to consolidate data into a single source of truth to drive meaningful business insights, build data applications, and share data and data products, as well as applies AI for solving business problems. Sounds kind of like Palantir, doesn't it? What company is the primary competitor to Snow? All right. Snowflake. Okay, the primary competitors to Snowflake are Databricks, Google, BigQuery, and Amazon Redshift, with Databricks often cited as the most direct rival due to its focus on both data warehousing and data science work. Why was I always hearing about this in Palantir? Does Snowflake compete with Palantir? Snowflake and Palantir do not directly compete, and their platforms are designed to be complementary. Snowflake is primarily a cloud data warehouse that focuses on storing, processing, and analyzing data. Palantir, on the other hand, provides a software platform for data operations and AI infrastructure that helps organizations integrate and act on their data. Well, isn't that what analyzing data is? This complementary relationship was highlighted by a partnership announced in October, which integrates Palantir's AI platform directly into Snowflake's. Oh, they're working together. They're buddies. Snowflake acts as a foundational layer, or the plumbing, for storing and managing large data sets. Palantir operates as the intelligence layer on top of the data. Its platforms help integrate data from various sources and use AI to provide actionable insights and drive operational decisions. Okay, so they're complementaries. That's cute. I always heard like, oh, Palantir, Snow is garbage and Palantir is amazing. That's what I always heard. All right, so very richly valued with a forward PE of 195. Okay, that's a lot of growth baked in. Trailing net income of 1.38 billion, negative 1.3. They just booked a massive loss. What's going on here? Now, revenue growth is very impressive. Okay, that's good. Look at that revenue growth. Revenue, my avenue. Very, very powerful revenue growth. It's actually reaccelerating. So that's encouraging. God, look at the revenue growth back in 2021, 2020, 2021. Good Lord. So they're reaccelerating revenue growth, at least in the most recent quarter. So that's good. Margins. They've been able to slightly increase their gross margin over time. Operating margin, nothing but losses, but they're narrowing it down. Okay. Most recent operating margin was negative 29%. Profit margin, most recent was negative 26%, but they're narrowing losses down. Let's see. Free cash flow per share. They do have positive free cash. Let me guess. Stock-based compensation. Let's see. Let's look at their balance sheet. I'm sure their balance sheet's solid. Cash and cash equivalents, $3.6 billion of cash and short-term investments, $646 million of accounts receivable, total current assets of $4.5 billion, current total liabilities of $3 billion, mostly unearned revenue. Okay, so if you look at their I'm drawing a blank here. Their hold on a second. Current ratio. If you look at their current ratio, which measures current assets versus current liabilities, you might be like, oh, well, it's okay. It's over 1. That's pretty good. Most of their debt, their short-term debt, is cash they've received up front but haven't earned yet. So when you see current unearned revenue accelerating, that's kind of an indicator of what their future revenue is going to be. It's just cash they've received up front for performance obligations they have not executed on yet. So that's good, basically. You kind of want to see that going up, and hopefully it doesn't get canceled. Long-term unearned revenue, a lot less. So most of their revenue they're going to earn in the next year. So their liquidity is very strong, unless there's a mass cancellation of their services. Long-term assets, a lot of long-term investments. Some good. They've been making a lot of that. They've been doing a lot of acquisitions. Long-term deferred chart. Let's look at their debt situation. Long-term debt. Okay, so they obviously piled on a bunch of debt to make some acquisitions. Hopefully those work out. So overall, pretty solid. From a liquidity standpoint, they're doing pretty solid. Really nothing that negative to say about their balance sheet. Cash flow. They're printing operating cash flow. Obviously, it looks like it's some kind of seasonal thing here. Looks like the first two. What is this? Okay, it looks like the end of each year and the beginning of the following year is when they really print a lot of operating cash flow. So that's probably like renewing contracts. And obviously, it dips pretty massively in Q2, Q3 of each year. So they've been doing pretty good with operating cash flow. Hopefully it continues. Capital expenditures, really not significant. Most of their cash flow is going to acquisitions. and investments in securities. They're issuing stock, but it's not crazy significant, and they're buying back stock. So this is the actual cost of stock-based compensation. I've said this over and over again. Stock-based compensation is a non-cash expense on the income statement, but in order to keep the amount of shares from growing precipitously via stock-based compensation to employees, you have to buy back shares to keep the float from massively expanding. So instead of them paying a dividend or reducing the share count, they have to do these massive buybacks just to keep the share count stable so it doesn't explode. This is the cost of stock-based compensation. This is what you're actually paying as a shareholder, okay? So they've been doing not a lot of stock issuance. I mean, most of it is probably stock-based compensation. The employees pay cash into the company. They buy stock at a certain price. They pay cash, and then they receive the stock. And then the company takes other cash flow, and they use that to buy back a lot of the stock to keep the float stable. So the true cost is what they're paying to repurchase the stock. But, I mean, they're printing positive operating cash flow, and it's doing pretty well. So this kind of gives me Palantir vibes. I mean, with this one, it's kind of like, oh, hopefully it gets into a bubble, bro. But it's very richly valued. I mean, their fundamentals are doing pretty well. They're growing revenue fast. They're reaccelerating revenue. They have positive operating cash flow. Their balance sheet, their liquidity's fine. They have a decent amount of long-term debt, but they have pretty solid liquidity. So to me, it seems very richly valued. I mean, price to sales of 21, that's pretty rich, but it's not a clown stock. They've been doing some good things. So I've seen worse companies out there. I'd be careful with the valuation. Okay, that's pretty crazy. It could go ballistic again. I don't know. But a 21 price to sales, you're paying $21 for $1 of trailing revenue. Price to operating cash flow, 106. It's very richly valued. So you're going to see lots of losses, and you're going to see lots of cash flow going towards buybacks to keep the float down massively. That's where most of this company's cash flow is probably going to freaking go to, is buying back stock to keep the float low. So you're basically just paying off the employees. Like, you as the shareholder, what value are you? The share count isn't going down. It's just maintaining its stability because they're giving out stock-based compensation like candy. Let's see. Where's the add back? Yeah, that's where all your cash flow is going. Whatever. So that's Snow, but I mean, it seems to be doing there's a lot of positive things, but I'm not a big fan of stock-based compensation because it does have costs. So be careful with this one. It's pretty richly valued. Not saying it couldn't do well, or the price to sales could go to 100 trillion. What's Palantir's price to sales? Oh, well, 107. I guess that's a little bit more reasonable. Wow. Okay. So that's Palantard. All right, I got another Venmo, and then we'll check these other ones. Oh, we got another gifted membership from one of my favorite fans of all time, Major General Tao. Gifted one Strongman personal finance membership. Who's the lucky girl or guy? Probably a guy. Well, congratulations, whoever the new lucky member is. Welcome to the channel. Your video on Zone with Doge really got me thinking. What were you thinking? Post more you don't have to do another super chat. Just post more in the comments. I'm sure I'll get to it. All right. Well, let's move on. We got another Venmo. I recommend you guys mostly do Venmo. Okay, that's just my personal recommendation. Okay. This man said, do not dox him. His name begins with an M. Therefore, I just doxed him. All right. So this stock is 4. 4 rhymes with, I don't know. I don't want to say it. Okay. 4. 4. Shift 4 payments. What in oblivion is this? Market cap of 5.8 billion, almost 5.9 billion on trailing revenue of 3.88 billion. It's got a forward PE of 10. That's very low. Why? and a trailing PE of 30. Let's see. Okay, in the past 5 years, it's up 21%. Oh, I can see. Oh, so it dips and then it rips and then it dips and it rips. I can see. I can see the bull thesis here. Shift4 Payments engages in the provision of software and payment processing solutions in the United States and internationally. PayPal, I mean, maybe it's different somehow, but are we sharing? Are we sharing? Yeah, we're sharing. PayPal, there's 1,000 different payment processors. The company offers payments platform which provides omni-channel card acceptance and the processing solutions across multiple payment types, including credit, debit, contactless card, EuroPay, MasterCard, and Visa, and mobile wallets, as well as alternative payment methods such as Apple Pay, Google Pay, Alipay, and WeChat. Okay, interesting. Let's go to the website. Experience the future of commerce. Accept payments anywhere with Shift4's end-to-end commerce solution. Let's see. In-person payments. Card present payments, next level in-person payments. Optimize your operations and provide an exceptional checkout experience with versionable card present payment solutions. So what do I download the app and then they just tap the screen? Is that how that works? Point of sale perfected with hundreds of integrations to leading point of sale providers. Property management systems and our SkyTab point of sale system. We've got you covered at the point of purchase. Payments in the palm of your hand. Deliver a seamless commerce experience across your entire business with a wide range of mobile solutions. Man, maybe I should use this to get paid, bro. Okay, so it's another one of the freaking payment processors. Let's see. Global. It's transforming global commerce with seamless transactions and tailored solutions, empowering merchants and partners worldwide. Look at that footprint. Look at it. It's what is that? Kazakhstan, Mongolia. What about Russia, bro? Why not Belarus? Why not North Korea? Why not Africa? There's a lot going on there. All right, so 260 billion processed annually, 200,000 customers, 5 billion transactions, and 100 plus payment methods. What are the main brands? Wyndham, White Elephant, JC Resorts. Let's see. Wonder what their biggest. What companies are Shift4's? I can't spell. Shift4's main clients are mainly in the hospitality, sports, gaming, and retail industries. I guess that's their niche. With large corporations like Burger King and Wendy's, major hotel chains such as Best Western, Wyndham, and Hilton, and entertainment venues like Allegiant Stadium and New Orleans Saints. Additionally, Shift4 has expanded to handle payments from other companies, including Elon Musk's Starlink. All right, let's ask Google AI a little bit more here. Okay, they're pretty prevalent. I've never heard of this company before. What makes Shift4 unique from competitors? Oh, it's vertically integrated end-to-end commerce ecosystem. Key differentiators include single vendor solution for complex environments. They consolidate multiple functions, point of sale, payment processing, analytics, third-party integrations that typically require several different. I don't think that's true. I've heard of other companies doing this. Vertical specific expertise, unique razor and blade model. They provide hardware at a low or no upfront cost to the merchant, generating long-term recurring revenue through payment processing fees and value-added software. Okay, so I don't know how this is really differentiated. I mean, I guess they have their little target market of like hospitality, Amerifat food, and sports and entertainment, but I don't see how this is like unique from any other of the 1,000 freaking payment processors out there. All right, let's look at the fundamentals. Wow, look at this. That's some pretty good revenue growth. I'll give them that. I don't know if they did an acquisition or what. That's pretty solid revenue growth. But why is the forward PE so low? Why? If they're growing that fast, why is their forward PE so low? Unless they're like some kind of massive charge everybody knows is coming. Okay, so revenue growth is pretty solid. Gross margin is ripping pretty good. Decent and growing operating margins. The most recent quarter was 11%. Profit margin pretty narrow, and free cash flow margin pretty solid, around between 10 to 12%. Let's look at their balance sheet. 1.5 billion USD of short-term investments in cash, 2.7 of current assets, 1.9 billion of current liabilities. They got some current portion of long-term debt coming due. Okay. Long-term debt. They're packing on long-term debt. Are they acquiring stuff? What are they doing here? Yep, they definitely made an acquisition. Okay. So you see the revenue growth. It's like, wow, their revenue grew massively. It's from an acquisition. What company did Shift4 recently acquire? Global Blue and the North American subsidiaries of Worldline. Okay, they just bought Global Blue in a deal valued at approximately 2.5 billion enterprise value. It expanded them into international markets in Europe, Asia, and South America. Global Blue is known for providing technology and services to luxury brands, including tax-free shopping. And then they also just acquired Bambora North America. Added approximately 140,000 merchant solutions to Shift4's portfolio. I mean, okay, as long as the acquisitions are good, I hope it works out. I don't know why their forward PE is so low. That's a little concerning. Why is Shift4's forward PE so low? I'd be shocked if this actually answered this. Due to several factors, including broader sector weakness, potential risk from its acquisition-heavy growth strategy, vulnerability to economic downturns, and market uncertainty. Shift4's strategy heavily relies on acquiring other businesses, such as its significant recent acquisition of Global Blue. Large-scale international acquisitions carry integration risks, including potential operational inefficiencies. The company relies heavily on discretionary consumer spending in the hospitality, entertainment, and restaurant sectors. An economic slowdown or recession that affects consumer confidence and spending could negatively impact Shift4's transaction volume. Intense competition. Yeah, it's unique, bro. They have point-of-sale systems. There's tons of competition now. So basically, they have to fuel growth by buying other businesses. Their founder departed to lead NASA. That's interesting. Why are you going to NASA, dude? What's wrong with you? Stop. Okay. You should have listened to me. You don't go to NASA. You stay in the private sector. What's wrong with you? I'm leading NASA. Yeah, loser. All right. So my overall thoughts. So revenue's growing pretty precipitously, but it's being fueled mostly by acquisitions. It's in a very competitive landscape. Profit margins are pretty narrow. Cash flow is okay. Their CEO just left. An economic downturn could cook them. They're powering a lot of their growth by acquiring other businesses. Their forward PE is low. That concerns me. I would look into that more. Okay, but I mean, overall, there's positive things going on with this business. What about the operating cash flow? Yeah, they're posting positive operating cash flow. Let's see. Yep, pretty solid operating cash flow. Okay, so there's some good things and some bad things. The main thing I'd be concerned about is you need to really ask yourself why that forward PE is so low. For a company that's growing that fast, it's a little weird. All right, so that's that. Let me check. We got another super chat from Mr. M, for Roblox. Oh, did my Facebook stream cut out? How unfortunate. Do we get any more super chats? No, I guess. All right, we're going to move on to Roblox. So Roblox is very popular with the youth, apparently, okay? I've heard that it's very popular with the youth. So let's see how Roblox is doing. Let me share my screen. Roblox by Dirty Socks. Wow. Market cap of 74 billion on trailing revenue of 4.46 billion. This is very richly valued. What's the price to sales? 16. Okay, there's some risk there. Companies that trade at those kind of valuations, like, they can collapse in a day. Like, they have one bad day of earnings and they freaking collapse. So it's basically pricing in probably a lot of solid growth and a lot of perfection. That's a high price to sales. Let's see. Roblox. What is Roblox? Let's just go to the website. No, I mean, I've heard of, like, I know people whose kids play in this. I don't know if I'm going to let my kids do this freaking nonsense. There's probably a lot of degeneracy that goes on. Like, if you wanted to target certain subsectors of the population, you're a freaking weirdo, you would probably go on here to try to do that. But, I mean, I'm kind of familiar with it. Basically, it's a platform where you can create games and kids can purchase games. And they purchase these things called Robux, I believe they're called. And it's basically in-game currency. So I'm pretty sure this company's probably doing well from an operational standpoint, but it's pretty richly valued. All right, let's look. All right, market cap of 75 billion, trailing revenue of 4.46 billion, negative net income, so they're losing money. No PE ratio, no forward PE, so they're not even expected to be profitable next year. Wow, look at this. Look at this. This company got cooked back in during the cloud market, and then it's absolutely ripped. The biggest risk is valuation here. I mean, like, that's a pretty significant move. Not saying it couldn't go up more. All right, let's see. Holy smokus. Look at that revenue. What's going on? What's wrong with these kids? Okay. Maybe they did an acquisition. I don't know. Their revenue has absolutely exploded. They had a pretty good quarter last quarter. Let's look at margins. I mean, gross margin's been pretty steady. I mean, it's declined a little bit, but whatever. The revenue growth is extremely solid. Operating margin, they've been posting losses consecutively for the past 5 years. I'm sure they're focusing on growth, bro, and stock-based compensation, bro. Profit margin has been negative the last 5 years, but it is narrowing. And they have pretty strong free cash flow margin. So from what I remember from this is that a lot of their cash flow came from, like, basically the Robux. Like, because you pay up front, right? So they debit cash, they credit unearned revenue. And then once those Robux are redeemed, that's when they record the revenue on the income statement. So, yep, this is one of the typical business of stock-based compensation, massive stock-based compensation, which is basically why they're recording losses. Yeah, unearned revenue is going crazy. People are buying this stuff up. Woo! I mean, that's pretty positive. What are they doing? They're not even focusing on buying back stock. They're just issuing shares. Let's see how much the share count has gone up. Yep. So they're basically just focusing on growth. But at some point, the stock-based compensation is going to come back to bite you. They're going to have to buy back shares if they want to control the share count. They're going to have to. Otherwise, you're just going to be diluted to freaking kingdom come. But very impressive revenue growth, and they have pretty solid operating cash flow, and that's obviously from pre-bookings. Let's go look at or purchases of Robux, excuse me. Let's look at their balance sheet. Unearned revenue. Well, let's start from the top. So 2.8 billion of cash equivalents, 4.3 billion of current assets, current liabilities of 4.5 billion, but mostly unearned revenue. That's cash. That's basically the Robux that they've purchased. So their liquidity is very solid. They're getting freaking money, cash thrown at them by kids. So I wouldn't worry about their liquidity. Long-term assets, they really haven't plowed that much into property, plant, and equipment in the last couple of years. They've been making some long-term investments. Maybe they're buying up parts of other business. Goodwill, no new acquisitions recently. Long-term deferred charges, not exactly sure what that means, but they could be trying to match expenses to revenue when it's earned. But that's going up, but nothing concerning. Let's look at debt. Okay, they've been slowly paying off their debt. They got about $1 billion of debt. They got some leases. Long-term unearned revenue. Why is it not popping up? Yeah, so, I mean, look. Very solid revenue growth. Richly valued. Just had a massive rip. You're going to have to pay back that stock-based compensation at some point in the future. It seems to me like the time to buy this was back here. I mean, I'm not saying the stock couldn't rip anymore, but when I see a chart like this, I'm like, that's a little concerning. Okay. So the fundamentals of the business are solid. They're focusing on growth. It's working. They're generating lots of cash flow. But at some point, that excess cash flow is going to have to go back to buying back some of the float to pay the stock-based compensation. But operationally, they've been doing extremely well. Their balance sheet's solid. No major concerns there. So good balance sheet. Good income statement on the revenue side. Obviously not profitable because of stock-based compensation. And those losses will catch up to you. So personally, I just think it's richly valued. I mean, this is just my opinion. I can't predict the future. I don't freaking know. But it seems like you kind of missed the time to buy it. Okay. Maybe wait for a dip, bro. So that's that. But they're doing pretty well on a lot of metrics. So I'm not going to say it's a clown stock. It's definitely not. Okay. That's Roblox. All right. Let's see. Any more money? Nope. All right. We're going back and we're going to do some member-only comments. I'm going to close this. Give me money, brokies. I've had many good trades and I lose one and I'm a clown. Gil, where did you go for the last couple of days or couple of weeks? We thought you were gone. We were worried about you. I cried myself to sleep last night, concerned about you. Hello, James. Alan Carlson, my puts were up. Gil, you need to make your portfolio transparent. You need to publish it. Otherwise, we're just not going to believe you. And Dan thinks you need to hold till expiration date, I'm assuming, since he thinks I got clapped. The fact that you disappeared when you did caused people to speculate a lot. I mean, it did. Alan Carlson, for once in his life, is correct. You just like the market, you said it was going to crash. The market ripped a little bit, and then you vanished. So we thought you got your cheeks clapped, and that was honestly, that's a logical conclusion. If you're saying the market's going to crash and you're buying puts, and then you freaking vanish when the market rips, we assume that you got your cheeks clapped. That's a logical assumption. But we can't prove it because you don't show us the money. I've showed my portfolio. I have multiple times. We need to see it, Gil. Come on. Just be honest. Just show us. If you make money, great. If you lost money, it happens. It's hard. I think Trump is going full regard. Oh, he's going to try to pump the markets as long as he can. But, I mean, everything else, people are struggling, but, you know, the top 10% are doing well. They're consuming like crazy, and the stock market's pumping. So that's success. Trump has gone full regard and is willing to do whatever it takes to prop the market. I agree. It will backfire massively and hurt many people eventually. So for now, I'm just going to ride his clown market. The question is, when does it peak out? I don't know. Nobody knows. Strongman hasn't made anything valuable since I've been gone. Everything I say is supreme value. Did I miss anything valuable from Strongman since I've been... You need me to reassure you to not be a clown. If only you listened to me, Gil, you wouldn't have gotten your cheeks clapped. I'm hustling, going to trade quantum and short those or anything else. Oh, you're out of bonds now? You need to publish your portfolio. We can't believe you. I don't think so, Gil. He's just been using the same dubious tactics, lying, begging, and whining, the usual. Oh, please give me money, please. My kids are starving. I'm about to go bankrupt, please. Please, God, give me money. Super chat me $1 million. Please, I'm begging you. I'm on my knees. I'm on my knees. You can't beat him. Join him. It's absolutely criminal and disgusting what Trump is doing. Massive insider trading in his administration. Oh, people are corrupt in America? No way. We're the beacon on the hill, bro. His children pulled and dumped crypto on so many people. Yes. The crypto people gave him lots of money for his campaign, and he's able to enrich himself with crypto. So, of course, he's going to pump it. Shocker. It's all a scam. Crypto's a Ponzi scheme. It's a grift. But it went up. Shut up. I got in low. I'm happy with this pump on Bitcoin. It will go high. I've been busy crunching on my coding. Holidays are coming up. Yes, they are. All right. Well, Gil's having a long conversation with Alan Carlson here. Figure strongman isn't smart enough to take my advice. That's who we're dealing. Yes, if only I appreciated your genius, Alan Carlson. I'd have 1 million subscribers. If I just listened to Alan Carlson, I would have 1 trillion subscribers and be making $1 trillion a month in ad revenue. But you know what? I have a suspicion, Alan. I have a suspicion. Even if I got 500,000 subscribers, you'd still be criticizing everything I did. Because that's your nature. You can't help it. You just have to whine. That's what you do. That's your life. That's your soul. That's what makes you feel good inside. You feel alive when you complain. Chick. Is it just me or his views and subs going on a decline? No, I've been adding subs. I mean, obviously people like my channel mostly to roast grifters, and I haven't been doing that recently, but I mean, I've had a lot of sponsored videos. So, I mean, let's say I make a sponsored video, right? Somebody sends me $50. Well, even if the video gets 200 views, I made $50. So I don't care. And then if I need to roast grifters more, which I just don't have time, but when I have time, I'll probably get more views on those videos. I don't stress the views that much. I mean, obviously they're important, but at the end of the day, it's all about the revenue of the business. That's what matters. So I bet you my channel makes more than a lot of people with a lot more subscribers because I have other grifts, lots of other grifts. I know he says he doesn't care to be a full-time YouTuber, that he's doing taxes, but doesn't more views and subs. Oh, I agree. This is part of the strategy, but I'm also going to be, advertising on like Facebook and Google. I've got a marketing plan for tax season. Because if I can make $36,000 of after-tax profit in tax season, I'm set for the full year. That pays all my bills. And then anything on top of that is gravy. So that's kind of the plan. All right. Well, we got another super chat here. QS. Program often too. What is QS? QS, my incest. All right, QS.
QuantumScape Corporation. Wow.
Market cap 10 billion. Trailing revenue 0. Net income negative $449 million. No forward PE. QuantumScape Corporation focuses on the development and commercialization of solid-state lithium metal batteries for EV. Oh, EVs are doing so well, bro. EVs are doing so well in America. Yeah. Everybody wants an EV, bro. Let's go look at their website. I can tell you without even... This is a clown stock, okay? This is the definition of a clown stock. 0 revenue? Seriously? What are we smoking here? Oh, of course. Oh, I'm a genius. It's up 229%. Oh, BT went up 10%. Oh, I'm smart. Building the best battery. QuantumScape is on a mission to transform energy storage with solid-state lithium metal battery technology. Isn't Toyota also doing this? The company's next-generation batteries are designed to enable greater energy density, faster charging, and enhanced safety to support the transition away from legacy energy sources towards a lower carbon future. I mean, if you look at it on the surface, it's like, oh, we're making more efficient EV batteries. And that's a good thing. That's not a bad thing. But is there even proof of concept? Are they even deploying this? It doesn't seem like it. They don't even have freaking revenue. Letter to shareholders. On September 8th in Germany, we unveiled our launch program with the Volkswagen, the Ducati V21L race motorcycle. It's the first of its kind vehicle demonstration plan. It's a showcase for the exceptional performance of our no compromise next generation battery tech. So are we in like just the testing phase right now, basically? We're pleased to report we began shipping Cobra-based QSE B1 samples. Let's see. Yeah, it seems like they're just in the testing phase. Like they're in the, what's it called? Like the pre-deployment phase. They're just in the testing phase. Oh, let's see if this works. Okay, that's kind of early. Very risky. Financial outlook, GAAP operating expenses and GAAP net loss in Q3 were $115 million. Capital expenditures were almost $10 million. We ended Q3 with $1 billion of liquidity. Oh, you know what? They're probably going to be fine, okay? Because the stock's ripping, and I'm sure they're issuing shares like mad. And we now project that our cash runway extends through the end of the decade, a 12-month extension from our previous guidance of into 2020. Okay, so yeah, I'm not surprised. $1 billion in liquidity. We completed our at-the-market equity program before our shelf registration statement expired. Yep, obviously they're going to issue more shares. Customer billings in Q3 were 12.8 million. Strategic outlook. I'm trying to see when they even plan to like really deploy this. We have to ask ChatGPT here. I mean, they're going to be around for a while, okay? But they're going to record massive losses. I mean, EVs are going to freaking crap basically everywhere. Let's see. Yeah, insane expenses, insane losses, massive share issuance. This is just a freaking gamble. Like, why? Why? It's a $10 billion market cap with zero revenue. Are we joking here? Let me ask Google AI. AI. When does QuantumScape plan to deploy its products in EVs? QuantumScape is targeting commercial launch in EVs around 2026 and to begin mass production in 2020. I'm sure. To achieve this, they started shipping its advanced B1 sample cells. The company expects exponential growth after 2027. After 2027, as manufacturing scales up to meet demand. Okay, so in like basically a year and some change, 2 years and change. Oh, we're going to have exponential growth, bro. Trust me, bro. This is highly speculative. Highly speculative. And to be honest, I mean, like, look at this chart. Look at this chart. This is a clown stock. Okay? This thing is going to, as soon as the market goes risk off, this thing is going to freaking collapse. They're not even planning for mass production until 2028 is what it sounds like. And they have zero revenue. Are we serious here? No. Okay? This is a gambling stock. You want to gamble? Hope some other clowns buy it? Sure. A solid investment, bro? There's probably better options. I don't have a massive risk like this. Okay? Is it going to go bankrupt next year? No, it's not. Because you clowns gave them a bunch of money. No. No. Clown stock. This is a clown stock. I don't care if it goes up another 100% on Monday. Clown stock. All right. All right, that's QuantumScape. Who is messaging me on Discord? What do you want? What do you want? All right, let's do some comments. All right. We're going back to member comments. If you want a super chat or send a Venmo, keep doing it. Strongman's advice is supposed to be something bad. Let's see. You keep switching your name. Is it just me? Become a member again, bro. That's right, boy. Become a member. What's wrong with you? Wow, I hope that guy got a refund and earned interest. For the time Strongman was holding the money and never made... What are we talking about? We're just making up that I got paid and never did something. We're just making stuff up now. Okay, if you pay me for a sponsored video, I'm going to do it. Oh, Strongman, definitely. He got paid and he didn't do a video. Alan, you need to behave yourself, okay? You're being a bad boy. Lying is not good. Lying is bad. You're just making up scenarios. You're pulling stuff out of your very loose bunghole. That's what you're doing right now. He claimed nobody paid for it. Yeah, I'm lying, bro. He's getting super chats. Wow, Ryu. I hear somebody made a rumor that I perished. We don't know what happened to you, dude. You just vanished. Did anyone here think I was deleted? I mean, I didn't. I thought it was like a 2% chance, but I didn't think it was more likely than not. I saw people talk about it. STRC is dumb, and I'm a Bitcoin. I agree. It's literally a Ponzi scheme. Hinge, my binge. It's the only good dating app. Ryu. I buy undervalued treasury plays and the ETFs. Oh yeah, the bond market, man. There's some real alpha in the bond market, bro. From a retail investor. Degenerate morons. They're the ones that are going to get 50-year mortgages. If you can't afford a 30-year, I don't think you should be getting a mortgage personally. Boils, ha 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 ha. Couple $100. I don't know what you're talking about. I'm very litigious. Oh, am I about to get sued here? Wow, content. I should have bought Chipotle. Can we get some uncensored video? I can't. I have to censor myself. You know, when I have more time, maybe I'll just do like uniquely X streams, or maybe I'll stream to Rumble and X, but there's a lot of content I would like to cover on this channel and my other channel that I just can't, because YouTube is so censorious. You got to be a good little boy. Welcome, new pay pig. That's right. I'm a man. Sorry, bro. It makes some negative EPS. AI in China cheap, though. It's a penny stock, dude. Berkshire is invested in Snow. Why not Palantir, bro? Buy the Stock Analysis Pro. Subscribe. I'm not buying that. I heard we got a new potential pay pig. I'm just glad Gil is back. Me too. I miss Gillabong. By the way, does anyone want to debate me? I'll argue any opposition you want. Zone is down 65% on Friday. 107 is fair value. Yeah, I did my DCF on a Dogecoin treasury company. That's the wave of the future, bro. Don't buy the index. Buy a Dogecoin treasury company. Every failed business becomes a crypto treasury company. That's concerning to me. It's just one final scam, one final cash out. This one looks good. Sorry, I'm broke. Give this Chad money. That's right. Pay me, brokies. McDonald's is not needed. I am not a fan of McDonald's. Every time I go to McDonald's, I feel like a fat freaking pig. Disgusting fat pig. No, thank you. I'm actually getting hungry. I might go get some dinner soon. Maybe I'll go to McDonald's. Should I go to McDonald's? I have a McDonald's in my town. Should I go to McDonald's, everybody? What do you think? Should I become an AmeriFat? Well, the thing is, I'll eat the McDonald's and I'll be hungry right afterwards. Actually, I went grocery shopping yesterday and I got some, what did I get? I got some sausage. So I might make pasta and sausage, which is pretty delicious. I use whole wheat pasta and sausage, spicy sausage. It's pretty good. It's super cheap too. Oh, I can't afford to feed myself. I can get 2 solid meals for like $5, and it's I think it's pretty decently healthy. I mean, like whole wheat pasta and sausage, it's better than a lot of other food, and it's pretty cheap. Tesla's for special. Tesla? Yeah, it's for clowns. Tesla, that's right. Are you buying puts? No. Roblox is for the questionable peeps. I mean, the stocks went on a huge rally. It's pretty richly valued at this point. I don't know if you missed your opportunity with that one. Buy my weird money. I would rather buy Chinese. Strongman needs a funny hat. Do I have my hat in here? Oh, I got a hat. Hold on. I got my daughter's heart basket. Here we go. Here's my new hat. It doesn't fit very well.
Hello, I am Strongman. Buy my course, bro.
Oh, Gil's buying stocks again. Everybody start buying now. And a few days earlier, I started nibbling. Stepsis, my Epsis, what's up? Just got on. I see Gil is alive. Glad to see my boy back. We missed him. Strongman is the greatest channel known to man with the greatest chat members. What a crazy cult. I mean, would I say we're a cult? I don't think we're a cult. Okay. You know, surprisingly, a lot of my fans are like degenerates. Like if you join the Discord, which is free, by the way, see the pinned comment. If you join the Discord, there's a lot of degenerates in there. Like you would think we'd all be like VT investors. No, it's like crypto clowns and penny stock clowns and day trade. Like I don't know what's going on in my Discord. We're a pretty open-minded cult here. Sup, brother? I told you to skip my comments, clown. I didn't see it. Oh, I'm defaming Alan Carlson. Yeah, please sue me, Alan. Revenue is option. Yeah, who needs revenue, bro? I mean, 2028, bro. They're going to have revenue. They did some computer stuff. I admitted that owning VT is foolish. I've never said that in my life. Joseph Carlson is the best. Yes, buy large cap tech, follow super investors, and sell ball trim. He's a genius. Oh, yeah, and he also had QQQ. Let's see. 2 pounds. Sir. This is a $10 super chat stream, okay? Are you trying to grift me here? You know, here's what I'll say about Unity. It's clown stock, okay? People made fun of me about freaking Unity back in the day, and then it utterly collapsed, and I felt like a genius. But no, you owe more money, boy. This is a $10 super chat stream. This is not a $1.99 stream. Oh, it's got AI, bro. It's got AI. Send some funny money. Best hat. You guys like my heart hat? Rip Carlson. Half your viewers only watch for the interest. Yes, half of my viewers only watch because of you. What kind of delusional maniac are you? Are you sick in the head? Something wrong with you, boy. Will we get a Khmer? Well, he keeps getting bailouts, dude. Khmer just keeps getting bailout after bailout. The dude is buying crypto derivatives on leverage, and he hasn't been bankrupted yet. What does that tell you? It sounds like clown market to me. But he just doesn't go away. He's like the herp. He just he's always there. It's like, dude, can you just get liquidated, please? Can we have a Khmer liquidation event? I'm sick and tired of this guy continuing to just be on the internet. Posting trash, pumping trash. Give him a one-time 80%. Unacceptable. Oh, yeah, let me do your taxes. Oh, I quoted you 500. Oh, you only have to pay 100, though. It's fine. Yeah, I'm going to give you a 80% discount, bro. You know Strongman isn't generous. I'm running a business here, okay? Thanks, Mr. DH. Don't renew your membership. Is Khmer still making video? Yeah, he's on X now. He got yanked off of YouTube, so he's on X now. Where are you guys seeing what he bought? Go on X. His name is The Dividend. All right, somebody says my CPA charges $1,200. I mean, if that's for an S corporation and personal, that's fair. But if it's for like a 1040, I don't know if that's. I don't know. I'd have to see your tax situation. $1,200 seems kind of pricey for a 1040, but for an S corporation, that's not insane. All right. Well, I am getting kind of hungry, so, and I got to talk to somebody at 7 o'clock. 7 o'clock. According to data, the CPA pass rate is 50%. That's a flip of a coin. It's not. It's easy, bro. It's so easy. Everything I've ever done in my life is just crap. I have no accomplishments. I'm a loser. Axiom. Okay, so he says, I have a ton, LLC, real estate, stocks, and a job. I might be able to beat that. I don't know if you want to book free tax consultation. I don't know if we've talked before, but I might be able to beat that if you don't have two returns. If you have a S corp and a 1040, probably can't beat it. CPA is easier than passing your driver's license. CPA isn't a real job. No, he can't beat it. All right, guys. Well, that's it. Thank you for all the super chats. We covered that. We covered that. We covered that. Good comment. We got a new member. We got another gifted membership. Zone's a clown stock. QS, another clown stock. Somebody tried to grift me here. Let's see. All right. Well, that's it. Everybody like, subscribe. Consider joining as a member to support the channel. Consider also booking a free 30-minute tax consultation. I am a certified public accountant and would gladly do your business and or personal taxes. Any state in the United States, you could talk to me for free. I give you upfront fixed quotes for tax preparation, and I'll do your taxes like a boss. Finally, also consider joining the free Discord and following my X account. If I ever get deleted on YouTube and you want to still appreciate my goodness and deliciousness, you can find me in Discord. You can find me on X. I highly recommend you join the free Discord and follow me on X. And you guys have a wonderful, delicious evening. Cheers!